Hey, welcome to our home buying seminar. This is put together by myself, Riley Glover of Columns, Lakes, and Mountains, Jonathan Ferrante of Blue Water Mortgage, and Maria Romano of the Title Team. We're going to answer any questions during the seminar in the chat. At the end, we're also going to have a live Q&A. Let's get started, Jonathan.
Hey everybody, I'm Jonathan Ferrante with Blue Water Mortgage. Just wanted to say thank you to Riley for getting us started and passing it over. And also a big thanks for allowing me to do another new home buyer seminar with him. We absolutely love doing these events. They're very, very, very valuable. We always end up with people buying very shortly after. And the biggest thing is education. The hardest thing and the worst part of our industry is so many people are running around with no idea, no guidance, and no real understanding of how the process works. So that's what we're here to do today, is kind of just take off that top layer, because as I'm sure a lot of the people I work with would tell you, is I could talk for days on this topic. So we just want to get that initial burst started for you guys, so you know what's entailed, what you're getting yourself into. It's really, really exciting though, and we always want to have a little bit of fun instead of just all stress. The process usually does start with me. If you start with a realtor, normally the first thing they're going to do is like, I'm not even going to talk to you until you got a pre-approval letter. So you give me a call, they give you an email, and we get the ball rolling. A lot of times what it'll start with is just an initial phone call or an email with a basic loan application. Everyone is always going to want to be like, hey, I just want to go over my options and tell you what I'm dealing with, things like that. Don't be upset if a mortgage broker or a lender wants you to do an application first. Without the application, we can't really tell you anything. There's no real information we can give you except for kind of what I'm doing here, a very general idea. It has nothing to do associate with you guys. So the first step is getting that information all together in one place, so a loan officer, a mortgage broker, can build your file and really kind of give you the tools that you need to get where you want to go. I'm sure you've heard it said before, but it's hard to really navigate where you're going without knowing where you're coming from. So that's what we're first going to do, is kind of build that financial picture for you. The biggest things that are going to matter here are your income, current bills. And when I say bills, those are the bills that are on your credit report. So auto loans, cell phones, recreational merchandise, personal loans, student loans, all of those fun loans that seem to never go away. Those are your debts. That's what establishes your payment behavior. That, mixed with your income, your asset situation, is how we start the qualification process. We pull your credit, we take a look at your pay stubs, how long you've been working at these jobs, all of that documentation that's really telling you how much you're making, how much you're saving, how much is going out. A lot of times that's scary for most people. I always say that, most of the time it's fun until you talk to me. I try to make it fun because I also know that I have to dig through your financial life, and most of us spend most of our lives hiding that from the rest of the world. So we're here to help. Everyone here today is on the same team. We are all motivated to get you to the closing table. To be completely honest, none of us would even get paid if you didn't buy the house. So we're not ever blow you off. We're never doing anything for our own interest. It's for you, because we can only win if you win. And Riley and Maria, they've all heard me say it. We always want to catch ourselves winning throughout the process. Moving on to the next slide. How am I different? Brokers versus banks. A lot of people hear mortgage broker, bank, lender, all of these different terms to describe the guy that's going to give you money. As a broker, I work directly for my buyers. I don't work for any one bank. I don't work for any one lender. I bring buyers and banks together. I represent over 15 different banks and lenders. The reason why I spend all my time getting all those relationships and all those options is exactly that. You have plenty of options to choose from. They're going to fight over each other. Fighting will create value. That's why we're always able to guarantee the lowest rate, best closing costs for our clients, because we're looking at so many different options. Whereas most banks and lenders, it's like you either fit into this mold or you're not getting a house. And that's no fun, because everyone deserves a house. So we always want to make sure that we're providing options and customizing that loan to fit you guys, not fitting that round peg into a square peg. So it's just one of those times where you want to put yourself in the best situation. I used to be a financial advisor, so I always take a bigger picture look than just a mortgage, so we're maximizing every aspect of your life. The biggest thing I bring is if something goes wrong with your loan, which we always hope it doesn't, but things happen. The industry changes, your credit changes, your income changes. We have other options. We're not just stuck with that one option. We can move to another lender, move to another option, and still get the job done. Having that diversity and flexibility in a fast-paced environment is what really makes the difference. This slide is one of my favorite slides. I say it more than anything. Almost every day I'm having a conversation with someone. It's like, I can't afford to buy a house. And it's true. I wish I could afford to rent. I work very, very hard. I make a decent living. I can't afford to rent because $1,000 rent is the equivalent of lighting $1,000 on fire every month. It goes nowhere. If you have a mortgage, even if it was a little bit more, the money comes back to you in equity, in savings. And that is the best aspect of homeownership. I always tell my clients, once you buy the house, everything gets better. You have leveraged opportunities, you have equity for savings. There's so many different things you can do, and your credit is just going to go through the roof because you're going to carry much larger lines of credit. Not to mention, we all love that big interest deduction at the end of the year that you can start writing off some of the money you're spending on your home. It's huge. It's just, it changes everything you guys are going to do in your lives, and you think differently because of it as well. So just touching back on what we started with, and that's how we qualify our buyers. I'm actually going to go down to up. Is one, we always want to take into consideration the availability of inventory, which is available homes for sale on the market. What your current finances look like. That's kind of the big picture. That's everything put together. Your timeline. You know, a lot of times people are like, oh, we might buy next year. Then I'm going to be a little probably less detailed on things because most likely everything's going to change. If I have my way, I'm going to put you in a much better situation over those 12 months. So a lot of the things we're doing up front, that is not going to be the same situation you're going to be in when we actually get you out there shopping for homes. Wants and needs. That 100% is going to be, Riley's world. He's exactly the kind of home you want, things like that. If there's waterfront, rural, things like that, that's when I'm going to get involved as far as specialty products. If we're going to need any kind of special homeowners insurance, like flood insurance or anything like that. And then obviously the location. So I'm licensed in 6 states. We always want to make sure we're working in our wheelhouse and are able to get the deal done there as well. Plus, in New Hampshire, compared to like a Florida, New Hampshire's taxes are much higher in income on property taxes than pretty much any other state in the country. So when we're moving from town to town or even from state to state, we want to keep that in mind. That could be one of the biggest changes in your pre-approval amount, just moving one town over. So we'll talk about that a little bit more moving forward as well. And obviously, one of the biggest factors from the lending standpoint, what that price is going to be. What rolls right in the price is also what we call loan to value. And that leads us right into your down payment, getting approved, and all of that fun stuff that we're here to talk about. Next slide is the actual process of getting pre-approved. The cool thing is everyone that's on this meeting has gone through a pre-approval process at least one point in their life. So they know what you're going through. The first step, like I said, it might just be an email, it might be a phone conversation. But we need to get through some basic loan application questions, about 25 questions. What's your income? The specifics like date of birth, where you live, are you renting? How are you paid? How long have you been at that job? How much money you have in the bank? How much money of that money are you going to put down? There's a lot of questions that we want to get through up front so we know what you want, what you can get, and what I think we can improve our situation to. So those are very, very, very important that you answer them honestly. The last thing you ever want to do is be a buyer that's a liar, because everyone thinks like we won't find out. But it's 2021, guys, with software, third-party searches, the government's involved, they find everything. And when I started this conversation, I told you that I work for you, not the bank. So when we're going through some of that borderline or gray area stuff, that's when I really need to know everything. Because it's my job to package it all up and put our best foot forward with that underwriter. I work for you, not the bank. My job is to get your loan approved. Underwriter is to fight me on that. So we're always butting heads a little bit. And that's why sometimes I will push that we get absolutely everything up front. You always want to be prepared and have more information rather than less. Right there in the middle, you see information needed. So this is the overwhelming part, is normally when I ask people for the documents that support the application. 2 years tax returns, 2 years W-2s, 2 months bank statement. Everything goes in twos, if you guys haven't heard. 2 tax returns, 2 W-2s, 2 months worth of bank statements, 2 pay stubs, which is usually 1 month worth of pay stubs. Your driver's license. If you own any other properties through a parent or something like that, we need the tax bills on that. If you've ever been divorced, we need that. All of your asset statements, 401k, IRAs, everything. We want to put it all together to show your best financial picture. Once we get all that, it's going to take me about a day to pre-approve you. I take in all of these hardest facts, black and white numbers and everything like that, plus your emotion, your consideration, your goals, your dreams, all of that. We blend it all into a pre-approval summary that's basically, hey, here's your max, but after we talk, this is probably where you want to be, and let me know if you want to change this idea and how we can build in between that and customize the loan to meet you. So it says right there at the bottom, approval is good to 90 to 120 days. It also can be renewed very simple. If you have a very, very basic job, I get $50,000 a year, and that never changes. And nothing changed from now to 120 days later. I'm going to ask you, anything change with that? Nope. Just going to renew that letter. I will let you know that we're not going to pull your credit again. We're going to roll the dice a little bit until you find a place that you're a little bit more serious of. Because we don't just want to hit your credit every 120 days, or there's going to be nothing left, guys. So we want those scores climbing while we're working on these things, not dropping down low. Drop it down low. So, facts on getting approved. Applications are free. There are some shady lenders out there. They're going to charge you an application fee. Never do it, guys. Never, ever do it. None of us should make money unless you buy a house. It's that simple. I even pay for my appraisals up front for my clients. So if something doesn't go right and the deal falls apart, you're out no money. Not buying a house should not cost you money. It's that simple, guys. Multiple credit checks within 30 days. I love when my clients shop. One, I'm a broker, so I like to do a lot of that shopping for you guys. But if you want to check with someone else, I'll give you your loan package back, let them pull your credit. The same credit, multiple credit pulls within 15 to 30 days are all going to count as one credit pull. So you want to get it in shop, get your best situation in front of you, best rate, best pricing, all of that. That's what it's about, is the bottom line, guys. We're talking about a loan. It's a financial world. It's all about money. So you want to put yourself in the best situation, absolute best. It gives you some time to look at how the turn times are going to be for specific loan options, the cost of it, and that's what I say, the bottom line. Sometimes it could cost you more money to be late to the closing. So it might be worth it to take a little bit higher rate with a lender that we know can hit that date. So there's a lot of facts that come into getting pre-approved, and we want to make sure we're giving each one the attention it deserves. Fico scores. This is what most people is their biggest barrier to entry in buying a home. Fico scores. So as you can see, they're always moving. One, your FICO score can change in an hour from first credit pull to something else because it's a snapshot in time. So we always want to make sure things are prepped and ready for that credit pull so we're getting that best moment. The cool thing is a lot of lenders allow us to re-pull your credit from the time of application to a week before closing and capture some better pricing. I do it all the time. We pull credit day before closing, went up 60 points, we get 0.5% better in rate or something like that. So we will always double checking, triple checking, quadruple checking, and leaving no money or value on the table. That is my job, and I am very much crazy about it. Never, down to the penny. We don't waste anything. So you want to make sure that you have a good, strong credit score. I'm realistic, so I understand not everyone can be perfect. And financing will go down to a 600, 620, 640, 660, 680. Pretty much jumps in increments like that. You really want to shoot for a 700, 720 or above. That's where your pricing gets really good. You get a nice low rate. You're not going to have to pay for any rates or anything like that. And it's going to give you great options as far as taking a little bit higher of a rate and getting money back towards closing, called a lender credit. So there's a lot of different ways. If you're short on cash, we can make it work. If you're short on income, we can make it work. There's a lot of different ways we can move the rate around, your funds to close around, to build this loan to make it more comfortable for you. Because the last thing we will ever do is let you buy a house and then 6 months later you can't afford it. And you know what? You know what you're gonna hate? You're gonna hate me. And I don't like that. I don't like people hate me. So we're just not gonna play that game. We're gonna prepare for worst case and hope for that best and live in that worst case world. So always catching ourselves winning. From application to closing, your payment will get lower. From application to closing, your rate will get lower. It should never go the other way, guys. It should never get worse or more expensive. So just remember that. Always catch yourself winning, build in cushions, and prepare for the unexpected. Because from contract to closing, you usually have 30 to 40 days. A lot can happen that we didn't expect. The factors that affect credit. I love credit because it makes no sense. I worked in global credit before this. I was a credit manager. I was a credit analyst. So I bet I know better than most that there's a lot of things in our credit world that don't necessarily make sense. But they are the gatekeepers, so we have to play the game. No missed payments. Missing a payment or a late payment will cripple your score, guys. Set it to auto pay, set alerts. Always make sure you're making that minimum payment on your credit card, on your auto loan, on any payment you have. If a missed payment is hard to come back from. Also, managing your credit limits. So you have $10,000 of a credit limit. Anywhere from 10 to 30% is going to be your sweet spot. So $1,000 to $3,000 of a balance, paying payments on that, that's great. You have to pay interest payment, guys, if you're actually using credit. I hear people tell me all the time, I swiped my credit card and I paid off immediately. You didn't use any credit. Your score is going to drop because what you're going to get is a hit for low utilization. If you paid off the second you swiped that card, you weren't charged interest. You didn't use credit. If you don't use it, you lose it. So, most of the time, it's a pay-for-play game. You got to pay to get credit. So if you ain't paying interest, you ain't getting it, guys. So I am always available, by the way, because we could talk forever about credit, and it's not that exciting. So if you have questions, give me a call right after the seminar, and we'll go over it together. Anytime. It's a small passion I have. It doesn't make a lot of sense, so I'm always here to explain it to everyone. Cash to close. This can get a little stressful. Always start with estimates, and this is why we want to catch ourselves winning, guys. We want the money that we have to bring to the closing table to be less than what we expected, not more. Everyone I know can come up with less money. Very few people I know can just pull more money out of nowhere. So I can't give you money. It's actually a legal requirement. I can't give you the money. I can give you the loan, but I can't give you money towards your closing costs. So gotta go find it from somewhere else, guys. We want to be prepared. You can get gifts. It can be from a savings. You can pull from 401k. Lots of different ways to get the money. It all starts when you put your offer in with your earnest money deposit. It sits in escrow, shows you're serious. If you were to choose to back out after we committed financially, you could lose that. But we don't really ever see that happen. I'll be all over you when that commitment date comes. The earnest money will sit there in escrow to show you're serious, put your skin in the game. But when we get to the closing process, it does go towards your down payment closing costs. So it's not just gone. Your down payment, that is the equity in the house. That is your chips on the table for the lender to see, to manage some of that risk. It starts you off with some equity. It's great. It also makes it so the lender doesn't recognize a full loss if you never made a payment ever. Down payments go as little as 0% down, 1, 3, 5, 10, 15, 20, 25, and anywhere in between, guys. It all depends on what your situation calls for. Anything under a 20% down payment is going to require private mortgage insurance. It's a monthly payment that's based on a percentage of the loan amount. So that's why a lot of people are throwing 20% down at loans, is they don't want to pay that unnecessary mortgage insurance fee. If you do have a lower down payment, you have the mortgage insurance, you can refinance at 80% and drop it off, or at 78% loan to value, it falls off naturally. That's 78% loan to value. That is the value of the home, appraised value, compared to the loan amount. So, just like I said, earnest money goes directly towards the closing costs. Down payment can be gifted by friends or family. Closing costs and prepaids can be covered by seller and lender credits. Either everyone's favorite. Conventional loan will allow you to get 3% of the loan, the purchase price from the seller to cover your closing costs. Also, FHA, 6%. So you can go in, if the appraisal comes back higher for some reason, Let's say the contract was for $200,000 and it came back at $205,000 on the appraisal. We can match the contract price to $205,000, and the sellers give you the $5,000 back at closing. It's a great win for everyone. You're financing $5,000 over 30 years. It turns into like $6 a month, but you get $5,000 that you get to keep in your pocket, so you can go to Home Goods and make the home the way you want it. Everybody wants to go to Home Goods. That's what buying a house is all about. Walmart, Home Goods. Walmart, Home Goods. So you always want to make sure that you're ready for customizing the home. Any unexpected costs, you never want to drain your bank account just to get through the closing. And finally, one of the most confusing topics to most people can be the appraisal process. One, it's usually the slowest part of our process. Depending on where you're located right now, it's been taking about 3 weeks from ordering it to getting the final report back. And as you know, we usually have 4 to 5 weeks to close the whole deal. This appraisal is the cornerstone for underwriting on the loan because it's the collateral. They're going to let you borrow $200,000. They want to know that the house is worth more than $200,000. I think it's pretty fair. I pay for the appraisal up front, like I said, so if anything goes wrong, it doesn't come out of your pocket. If we make it to the closing, it's just part of the closing costs I've already quoted to you, and you're ready to go. So what it is a third-party gentleman or gentle lady that basically establishes value that's unbiased. They have no interest in the transaction whatsoever. They're just there to do their job. And what they do is they go back to the bank and say, based on the homes that have sold within a mile or two in 6 months, this is what we think this house is worth. And this is all the reasoning why. So it's hard facts. And makes the loan much more secure for the lender so they can sell it, make money, continue to fund loans, and help people buy houses. I put right here on the appraisal because many realtors have a hard time with this. And you'll hear about it in the industry. Oh, we don't want that loan product or this loan product. And most of the time, this is why. They're worried about the appraisal. Is it strict on the property? Is it lenient on the property? Are we going to need to paint the house? Are we going to need to add handrails? As you can see, FHA is the most strict. USDA the most strict. Most of the time, it's the government loans. What people don't understand is a VA loan is not a loan product. It's a benefits program. It's the most lenient. And then you have your cookie cutter conventional loan. It's the most common loan. It's changing, though. A lot of people have been utilizing these government loans and mixing and matching things. And there's so many cool products out there coming out every month that the conventional loan, even though it's that bread and butter, has fallen to the wayside a little bit as far as majority use. And my favorite, because I can continue to talk and talk and talk, are frequently asked questions I get. Most of the time, they're financial ratios. So we'll dive right in. These are some questions that my actual clients have asked me this week. What is debt to income ratio? What is DTI? DTI is the debt to income ratio. That is the comparison of your monthly income, whether it's your salary, overtime, everything you receive on a monthly income, child support, alimony, pension, any of it, compared to your current monthly obligations. And remember, monthly payments, monthly debts, credit cards, auto loans. It's all about your credit report, whatever's on that credit report. So you have your total debt to income ratio, and then you have your housing debt to income ratio. The total is the new payment of the home you're trying to buy, plus all of your other debts compared to your income. The housing ratio, just the payment for the housing compared to your monthly income. Both are factored in. FHA loans will let you go up to like a 55%, sometimes higher. Conventional loans want to go to 45%, maybe a little bit higher. VA, USDA, they usually want a little bit below that 45%, but there's wiggle room depending on compensating factors, which you might have more money down, or a very good credit score, great credit history, and they might allow you to creep past some of that debt to income ratio ceilings. So, debt to income ratio, one of the biggest factors: credit history, payment behavior, credit score, debt to income. These are the biggest parts of qualifying for a loan. Another acronym, what is LTV? You've heard me say it already tonight, loan to value. This is basically the reverse way of saying your down payment. Most buyers and consumers are going to say 20% down. On our side, we usually say 80% loan to value. Same thing. 20% down, 80% loan. Makes sense. You guys are bringing 20, we're bringing the 80. That's why it's talked about that way. That is very crucial when it comes to mortgage insurance. Loan product minimums. So when I say these low down payment options, they have 97 loan to value, which means 3% down. 95% loan to value, which means 5% down. 100% loan to value is your VA or USDA option. These are very high demand. They're also the most strict to qualify for because there's absolutely no chips on the table for you. It's all on the lender. So it's very risky. Everything's based on ability to repay and the risk for the lender. What does locking a rate mean? This is the biggest misconception. Everyone thinks, like, I locked in my 2.25. That is what I am getting. I locked in my 2.25. That is what I'm getting. I cannot change that. And it's just what it is. That's not true. When you lock into a rate, you locked into that day's pricing. So all of the rates are available to you, but what they cost. And that leads me into my next one, which is, when can I lock my rate? I said rate cost things, and there's also rate lock periods. So what rolls into that is the word points. You can pay or receive points. Paying points is paying upfront cash for a lower rate. It's a very simple concept. The lender expects to make the money. The lender expects that if they take your money up front and you sit on that rate, it's going to wash. That you're going to refinance most likely before then, and they'll keep some of that money. Well, that's why I'm doing the math for you guys. I let you know when it's the right time to pay points, or you can even receive points. Receiving points is more going to be in my new home buyers wheelhouse because you're worried about cash. So with rates so low, I have lots of clients that are getting base 2.75% rates, and they are choosing to move that up to 3% and getting a half a point or $2,000 or something towards their closing costs. It's a great move because the rate's still really low and they're struggling with the cash, so it makes it much more comfortable. So that is a good kind of just tell as far as there's 15, 30, 16, sometimes 90-day rate locks. The longer the rate lock, the more expensive the rate. It's going to cost a little bit more points. You always get a base rate, one that costs points, one that receives points, and it continues to move in both directions. More higher cost for a lower rate, or a bigger credit for a higher rate. So you'll always want to know a few options, not just this rate. No one should ever just show you one rate. That is a big, big mistake in our industry. At least 3 options, guys. Always get 3 options. What are closing costs? Closing costs are all the fees associated with. There's a lot. As you see, this is a team sport. Everyone is working really hard. They all need to get paid, and the government sticks their hand in too. You have your title search, your deed recording fee. These are all of Maria's fees that you're going to hear from her. They do third-party searches for us. They check clean title, all of that. You're going to have an underwriting fee from my funding lender that they do that all of that work up front. You're going to have an appraisal fee for that appraisal, credit report fee from our credit reporting company. And then you're going to have the biggest ones, which are your state tax stamps, which are a percentage of the sale price that goes to the government for the sale of the property. That is the biggest one. What is also part of these closing costs, and it's very common, always rolled in, but are separate, is the next one down, escrows. Closing costs and escrows. Your total amount of cash you will need to bring to a closing table is going to be your down payment, your closing costs, and then your escrows. All 3 of them bring your total funds to close. A lot of times you just hear down payment, closing costs, and that's because people include escrows with closing costs. Your escrows are your prepaid taxes and insurance. After you buy a home, every time you make a mortgage payment, it funds a little bank account that keeps saving all your money, so when you have to pay your annual taxes and your annual homeowner's insurance, it's all there waiting for you. So your mortgage payment includes every month's taxes and insurance in that total mortgage payment. Well, sometimes, depending on where you close, taxes and insurance are due, and the money is not already there. So they require that you pay for a full year of homeowners insurance upfront, plus a cushion of 3 months, so 15 months total. And then taxes, depending on the state, is usually anywhere from 6 to 8 months upfront of taxes. This always will have a balance in this account. If you ever sell or refinance, it doesn't go anywhere. It comes back to you. Like I said, it's a little forced savings account. This is the lender mitigates risk because they do hold the note on the property. So they need to make sure there's always liability insurance in case anyone hurts themselves, because they are liable. And that there's never a tax lien, because those taxes need to be paid if they maintain ownership, and one day you want to pay all off the whole loan and take full ownership. So that's where all of the cost for buying a house comes from, all the cash out of pocket, down payment, closing costs, escrows. Next step, once you kind of had those financings in order, is when you get back out on the hunt. A lot of people will do it backward. They talk to the realtor, they find that perfect place, then they come find me, and it's like a fire sale. This is why we're doing this, guys. You always are going to make sure the money is all set and ready to go before you start looking at houses and making offers. And this is where Riley takes over. And trust me, guys, he's the absolute best. We have a closing coming up. He's got another one on the books. He is always setting up his new home buyers for success. And like I said, we're always catching ourselves winning. So just let me know if you ever have any questions. My team here will let you know 7 days a week, 24 hours a day. You can call me anytime, guys. This is some serious stuff. It can be a lot of fun, but it's always important to have the right information. So that's what I'm here for. But just enjoy all the good information, and I'll be talking to you guys soon. Have a great night.
Awesome. Thanks, Jonathan. Now that Jonathan's actually got you pre-approved, we're going to go out and start looking at some homes. As I introduced myself in the beginning, I am Riley Glover. I do work for Keller Williams Lakes and Mountains. My office is located in Wolfboro, and I actually am a resident of Alton, New Hampshire. Some of the things that I can help you do as a realtor, preview some homes in advance. I do realize that right now some homes are kind of out of your way, might not be as convenient for you to view. I'll go right out there and take a look at them, make sure it's something that you actually want to take a look at. I'm going to personally tour homes in neighborhoods with you, keep you informed on new homes that come on market. That way you don't miss out on any opportunities. I'm going to help you preview homes on the web, and I'm also going to advise you on other homes that have sold and for how much in your desired area. That way we can see what's selling for what, find out what's going to fit into your budget, and see if we can find anything inside of your criteria. All right, now that we're actually going to go look at some homes, we're going to go over the list of homes that you've compiled, as well as a list of homes that I found on our local MLS. Some tips just quickly, right before you go and view some properties. Don't be put off by interior or exterior decorations. You can always change these once you do actually purchase the property. I usually suggest that you bring a notebook and a pen, maybe a smartphone, to take some photos that maybe you didn't see online, or maybe if you saw something that you think you might forget, we'll write that down. Keep a folder with flyers and any printouts on properties that you viewed currently. When you find a property you like, we can plan on visiting at different times of the day, drive by in the neighborhood, check out what's going on, and also don't forget to ask questions while you're there. All right, moving on to those questions that I was talking about. First one under the general is going to be, when was the home built? So if the home was built prior to 1978, we're just going to have to worry about lead. That's something I'm always going to make you aware about if you send me a listing and we're in that time frame, though. How does the asking price compare to other houses in the neighborhood? So if we're shopping the same neighborhood and we have similar houses, we're going to want to make sure that we're putting in an offer at the house that makes the most sense, as long as it's the house that you like the most, obviously. But we don't want to overpay for something that's really similar to something that's right down the road. What are property taxes? So that's something that I'm always going to have on the listing document, and I'll let you know just so you can get an idea of what you'll be looking at for property taxes on that. Outside of the property, what's your level of ground maintenance that will be required? So what kind of landscape are you going to have to do? What maintenance you're going to have to do in the winter, as far as, are you going to have to shovel to someone, snow blow for you, stuff like that. Are there any structural anomalies or problems outside of the area that the seller is aware of? Inside of the property, what improvements and additions has the homeowner made to the property since the purchase? So with this one, just going to let us know, what's been upgraded recently. Sometimes they're going to put this on the property disclosure. Sometimes we'll just have to inquire about it. And what appliances is the seller offering in the sale? So generally just your normal appliances: fridge, stove, dishwasher, microwave sometimes in some instances. So those things are just things we're going to have to verify are going to actually come with the sale. Major systems, what is the age and condition of each major system in the home? So in just a second, I'm going to touch base on home inspection, but the home inspector is going to be able to give you a lot better idea of how long these systems are supposed to last. What type of fuel is the home heated with? This is another budget item. Going to be able to figure out, how much it's going to cost to heat the home in the winter, and you're going to want to know what the utility costs are in the winter and the summer, and what the highs and lows are. All right, so let's just move on to the next slide. All right, so we found the house that meets your needs. Now it's time to make the offer. So once we have found the property you want, we're going to write a purchase and sales agreement. Most of the agreement's going to be standard. These are a few areas that we can negotiate. The price. So what you offer on the property depends on several factors, including its condition, length of time on the market, buyer activity, and urgency of the seller. The move-in date. If you can be flexible on the possession date or the closing date, the seller will be more apt to choose your offer over others. Additional property, we touched base a little bit on that on the last slide. That's going to include the things like the fridge and the microwave and things like that. We're also going to be as detailed enough to say that we want the exact items that are there. That way when we do purchase the property and we go to actually do the final walkthrough, we don't find just a bunch of different appliances that weren't there when we did view the property. Typically, you will not be present at the offer presentation. I'm going to send that over to the seller's agent, and then they're going to either accept the offer, reject the offer, or counter the offer with some changes. If they do counter the offer, we're going to get together as a team and just review those and make sure it's something that's still going to make sense and that you actually do want to go through with that offer. All right, so your home inspection is something I just want to review with you because it is definitely an option that you have when you put an offer in and it gets accepted. It's definitely something I'm going to recommend that you do as well. The goal of the home inspection is going to give you an objective, independent and comprehensive analysis of the physical condition of your potential new home and check for any safety issues that might otherwise be unknowable. So some of the things that these home inspectors are actually going to check out are going to be listed below. Electrical systems or your roof. They're going to check your foundation, doors, windows, radon gas if you like to, lead paint, asbestos. They're going to check the floors and the walls. They're pretty thorough. They do offer a lot of things, and that's always something when you set up the meeting with them. You can go over the prices and what particular items they are actually going to view for you as well. And then depending on the result of the inspection, we can back out of the written offer if we find some major problems that you really don't want to take care of. We can renegotiate the purchase price to account for those repairs, or we can negotiate that the repairs are made by the seller before we actually close on the property. And those things we're going to confirm on the final walkthrough and by requesting that they send in paid invoices for those items. I hope this gave you a better understanding of kind of what you need to do when you're looking for the home, what's going to happen once we actually find the house that you do want to make the move on, and what items are actually going to have to happen afterwards. We're going to finish up here with Maria from the title team. She's just going to touch base on what's going to happen at the closing table. And I do hope that you've definitely learned a lot from this seminar, whether it be from Jonathan or me or from Maria on this next part. Everybody have a great night, and I will answer any questions that we have towards the end. Thanks. Bye.
Hi, I'm Maria Romano from the title team. If you're speaking with me, you have figured out by now that buying a home is a full team sport. You started with Riley, you were interested in some property, he passed you over to Jonathan, who got you a plan, a budget, so you could move forward. Jonathan passed you back over to Riley, and now we're signed under contract. You found the home. Now, our job at the title team is to get you to the end zone. For us, we need to make sure you have clean and clear title on your property. So what that means is we do a title search, we go back 30 years, we make sure that there are no liens against the property, there are no outstanding things hanging out that will prevent you from having a clear title. We also recommend you buy homeowner's title insurance. That does protect you in the event that something gets missed later on. It helps with your attorney fees if there are any. Hopefully there aren't, but at least you have the coverage. It's a big investment. You want to make sure you protect it. We are also here to answer any questions that you have. This is the end of the game. These are the final minutes. So there's a lot of information that we'll still need to collect from you. You'll have a processor, a contact person, but you can always run through me. I'm happy to work through any problems you have, and if I can't find the answer, I'll go to the team to get it for you. We will set up a closing day. We'll let you know exactly how much money you have to bring to the table, which will be a bank check, or we can have you wire the funds into us. But we will get you to that point. We'll make you feel comfortable. I get to show up on closing day with my big stack of papers with Riley and Jonathan. We get to sign you off and start you on your way. We're here to help you, all of us together collectively. We're excited for this new adventure for you and happy to help in any way that we can. Thank you.